I'm looking at this from people who've been maybe sitting on your shares for 3, 4, 5 years. Where's the upside for this for them? Because you keep reinvesting in and plowing money back in the ground.
It's growth. Our mineral resources are effectively estimated with 1.3 million meters of drilling. It's an incredible number. I've never seen that in any project I've worked at. And we'll be the 5th highest grade mine in Canada in production and the 17th highest grade mine in the world.
Welcome to Crux Investor. Thanks very much for watching this video. If you like it, give us a thumbs up. It'd be much appreciated. And of course, leave us your comments below. It helps us understand the sorts of questions you'd like us to be asking, how you think the company did, and sort of generally how we can improve our product. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Darin Labrenz, CEO of PureGold. They're a Canadian gold developer who hope to get into production by the end of this year. That will dramatically change things. I think the market appreciates that. They've seen radical rise in their share price since we spoke to them last August, gone from 60 up to nearly $1, 60 cents up to $1. Pretty impressive stuff. We were interested in what they do next. How do they develop this project? Where's the next stage of growth coming from? So Darin gets into his phased approach to this, their current funding requirements, and how they're going to be able to deliver against those. We talk about a lot of different topics. Take a look at the description below. Anything interests you in particular, you can click on the relevant timestamp against that topic, and that takes you straight to that part of the video. Enjoy what Darin has to say. Hey Darin, how are you doing, sir?
Doing really well. How about yourself?
I'm coping. If I'm honest, I'm coping.
Yeah.
I'm coping with the aid of large glasses of red wine at night. Is the truth?
Yeah, that helps.
Yeah, it really does. But anyway, so we haven't spoken since last August. So time for a catch up because you had something good going on then, and you'd also just received a chunk of change as well to do some things with. But first, why don't we kick off with a 1-minute summary for people new to this story, and I'll pick it up from there.
Sure. We're PureGold Mining. I'm Darin Labrenz, President and CEO. We have the PureGold Red Lake Mine in Ontario, Canada. We're in construction today, fully funded, and targeting first gold pour in December of this year. Really excited about entering production in a rising gold market with a declining Canadian dollar. So I think we have a perfect storm brewing here. But I'm especially excited about the future and the growth potential that we see on our project to continue to expand and grow.
Great. Thanks for the summary. Just remind people what you've got today. What do you know about what you've got today? Because you talk about high grade, low cost, but what does that mean?
Yeah, so we went through a number of milestones last year. We've got a mineral resource today that's 2.1 million ounces indicated at 9 grams per ton. We've got another 500,000 ounces of inferred. We took a portion of that resource and we carved out a 1 million ounce reserve, and that reserve's at 9 grams per ton. We completed a feasibility study on that. Subsequently, we signed a First Nation agreement with our partners, Lac Seul and Wabauskang, fully financed the project through a combination of debt and equity, and initiated construction in August. So we're in full construction right now, again, and targeting first pour for the end of the year.
Okay, because I mean, the company itself, we talked about three times, I think, last year from February onwards. And there's a little bit of progress each time, and the truth is, for the last 3-4 years, it's been sort of relatively bumping along a similar level, and hadn't really made an impression on the market. But then you got $47.5 million last July. Mm-hmm. The market then turned August, September in terms of the price of gold. The bull market for gold happened. The timing was good for you. And I think the reaction has changed, because I do remember around that time you were looking to list in London, which you did. Mm-hmm. I think you did do. Was that the moment where you think things changed for this company?
Yeah, certainly. It's given the market we were in, we saw it as prudent to move forward into production, and that's where we took a portion of our mineral resource and converted that into reserves. And I think it's as it turns out, people get pretty fixated on the numbers that come out there, but we have a much broader project, broader project here in terms of growth and size and scale and potential. And I think that's what I'd like our investors to think about is, kind of 4 themes here: location, grade, size, and growth. And as it turns out, yes, we've been seeing an increasing gold market. It's been happening for some time, and There's real drivers behind that between, government debt, real interest rates pushing down towards zero. All of that's been very constructive for gold. With the combination of a weak Canadian dollar, we're looking very, very positive as we come into production here.
Yeah.
And so quite excited about that.
No, I get that, but everyone's in the same position. What I was trying to work out is what are the moments that define the company? And what I was asking you there was, do you think market conditions contributed towards the change in attitude towards your company, or was it that moment when the board said, well, let's just carve out this a million ounces here and just come at it a different way?
I think it's kind of all of it, kind of coming together at the same time. So as I said, moving through each of these milestones and knocking them off in succession between, the updated resource, the feasibility study, the First Nations agreement, the financing, putting us in a fully funded position, and doing that in the context of a rising gold market has really, helped us move forward from a valuation perspective. I think right now what we're looking at, we're months away from production, and so naturally what you see is companies start to re-rate as they come into production. And even if you look at our first phase alone and you look at the numbers, based on today's metal prices, we're trading at, half times NAV. Producers typically trade up towards 1 times NAV. So we should see a strong re-rate as we come into production. But beyond that, as I said, we're already looking at the next phase. We've already drilled off resources. We've already done some early stage scoping level work on those resources. And we think there's a real growth path in front of us beyond that first phase of development.
Right. Okay. That's normally the point. The CEO would have taken my lead and taken the credit for changing the business plan and fortunes of the company. But no, I appreciate there's a lot of moving parts. But as I say, there always are. And I'm just intrigued by the companies that decide to go early, phased approach that, I know you've talked about many, many times before, to say, well, let's try and get some revenues flowing. Let's show people what we've got, what we're capable of doing here. And I know you're fully funded for that. But what's the plan after that? Because people are walking into this thing. You're at around $1 today, which is great. I think we're about 60 cents when we last spoke in August. So there's been some real movement there. But what's the game plan today? So for people looking at you afresh, not existing shareholders, but new people looking at you, where's this growth that you keep talking about coming from?
Yeah, so when you look at kind of the mineral system we have in place here, there's 2.5. It's a brownfield site. There's 2.5 million ounces of historic production. We've got a resource today, as I said, of 2.1 million ounces indicated, another 500,000 ounces inferred. So this is already a 5 million ounce system. The team has been fantastic. They've made several discoveries over the last few years, and those discoveries, I would classify them as earlier stage. They're at surface. They're wide open. We continue to drill in those areas. So we didn't consider those as part of our, first phase mine. And so those are areas where we continue to drill, as I said, and looking to convert inferred to indicated, grow those resources. We've already looked at early stage engineering or scoping level work to see how we might mine them, what the mineability is. And we've done that in the context of, from a thought process or business strategy. We've done that in the context of looking at our plant and saying, well, what if we expanded the plant? And we mine these, these satellite deposits or new discoveries concurrently, what would that look like? And it looks very attractive. It's immediately accretive. It adds a lot of cash flow without significant capital, and allows us to improve the production profile as well.
Okay, so run through the numbers for phase one for us, because I want to get onto the phase two and see what that increment is. So I've got them here, but you tell us those if you don't mind.
Yeah, so when you look at phase one, as I said, we're sitting here in a rapidly moving, gold market. We did our feasibility study at $1,275 per ounce, which translates to 1,700 Canadian. Today we're we're plus 2,400 Canadian. So because of that disparity between the US and Canadian dollar, we've been seeing, on a daily basis, almost record highs for gold price in Canadian dollars. So, Canada's a fantastic place to be building a mine. We are Canada's next mine. You've got the security of strong regulatory environment where we're not worried about personal security or land tenure, but we're also getting this double bump, if you will, between a rising gold price and a lower Canadian dollar. So to put it in the context of our first phase mine, we've got a 1 million ounce reserve at 9 grams per ton. When you apply $700 movement from the time we put our feasibility study out, that's $700 million of cash flow on top of that first plan. So it's going to be an incredibly robust mine. It's going to generate all kinds of cash, and that cash is going to allow us to self-fund the exploration and production improvements that we hope to see from our second phase and our third phase of development on the project.
Right. So what happens with the money you generate from phase one? Does that all go in the ground? Do shareholders see any of that? Are you, even at this very early stage, thinking about the possibility of dividends? How do you reward shareholders, new and existing?
Yeah, so dividends aren't something that we're considering in the early stages. It will reinvest in the project, and that is because we see such a growth path in front of us. So what we're looking at here again is a fully funded exploration program to grow those resources, to move them very quickly into production. We're targeting right now year 3 of operations to bring those discoveries online, again possibly through an expansion. And then when you look more broadly, we've got, I would say, a core piece of fertile red lake geology. We hold 47 square kilometers. We have a 10-meter strike length of the main conduit or plumbing system, if you will, for large deposits. And we've intersected mineralization across 7 kilometers of that, which is wide open to depth. So that's where we'll lay on the next phase of growth.
Okay. And I guess I'm looking at this from people who've been maybe sitting on your shares for 3, 4, 5 years. I mean, where's the upside for this for them? Because that you keep reinvesting in and plowing money back in the ground and plowing money, and you're producing good grades, lots of ounces, but the money keeps going back in the ground. What's the upside for them?
Well, it's growth, right? And so when we look at it, you think about our sector and where has all of the a lot of the value been generated over the last decade. It's from brownfields discoveries, if you will. I mean, just to the north of us is the Red Lake Mine, where I worked as chief geologist in the mid-1990s. It's really identical in every respect. With same rocks, same alterations, same timing of mineralization. The discovery of the high grade zone there was a company maker. It turned Goldcorp into a $20 billion company in its peak. And you look at our current shareholders, AngloGold Ashanti, Newmont, number 1, number 3, and number 1 gold producers in the world, Eric Sprott, Rob McEwen. They're looking for that kind of transformative growth. And to speak to Eric Sprott, where does a lot of the money come from that's being invested across the sector? It's Kirkland Lake, which is the exact same story. You got the Macassa mine, deep discovery. You got the Fosterville mine, deep discovery. Now it's a 16 billion Canadian company. So the real growth here that we see on our project, between the discoveries we made at surface and this big mineral system that's already 5 million ounces, that we see a clear path to doubling of that's going to drive real value for our shareholders.
Okay, so you're looking to build a mine here. You're not looking to flip this. You're not looking for a quick return.
No, absolutely looking to build a mine and build a mining company here. Again, we're extremely lucky to have this piece of ground. We've had great success in building a significant resource. We're going into production with a portion of that, and we'll be the 5th highest grade mine in Canada in production and the 17th highest grade mine in the world. Put that in perspective, we're higher grade than 95% of the mines out there. So that drives an opportunity. It drives opportunities for cash flow with strong margins, given that the grade that we see there.
Have you got the team on board to do that?
We do. We've been very successful in recruiting. When we spoke last August, we would have had 4 or 5 people on the ground. Today we've got a workforce of over 60 people, full complement of underground miners, right through supervision, maintenance, technical services are in place with engineering, geology, surveying, safety, security is in place, the admin team is in place. So we're building out a team, but we've been incredibly successful thus far.
Okay, and this team that you're building out, what's the experience in creating shareholder value? What do you know? What I know, you know how to build mines. I think I've read you've built 3 between you, which is great. Have you been able to create meaningful value for your shareholders, whether they be Eric Sprott or a humble retail investor?
Yeah. So I'll speak to the board and management team. We've clearly shown a real strong track record of creating value for our shareholders. If you look at Mark O'Day, who's on our board, he brought Frontier Gold from a $2 million startup company to ultimately a $2.3 billion acquisition by Newmont. And he's done it again repeatedly. The Karma project through True Gold Mining, transaction with Endeavor, multiple examples here of bringing projects through exploration into development, into operations, and in those cases ultimately transacting. You speak to the kind of the broader group, and we brought 3 mines on stream over the last 4 years, if you include our own. That being Long Canyon, now owned by Newmont, the Karma mine, owned by Endeavor, and the PureGold Red Lake Mine. So there is that real strong track record of generating value to building mines, operating mines. More broadly across the board, you've got, Maurice Boulanger just joined our board. She's just gone through a successful build on the Atlantic Gold operation, following a very much, similar phased approach to development, and that had a successful outcome. It's a fantastic team that I'm working with here.
Do you regret the London listing?
Not at all. No, it's an opportunity to generate more visibility on a global scale for the company. We've seen both retail and institutional shareholders in London invest in PureGold, so it's going to take time, to continue to spread awareness, I guess, of PureGold mining and where our growth opportunities are. But it's going very well.
Okay, and in terms of that change between the balance between retail investor and obviously you've got some names in there, is that evolving as you're getting closer to production or closer to pouring?
Yeah, yes, absolutely. I mean, if you look back to the early days of PureGold, it would have been predominantly retail. We've now got, I highlighted key investors there between mining companies and mining titans, if you will. They collectively hold about 30 to 35% of the company. We've seen some strong institutional ownership come in over the last couple of years as we move closer to production, and I think we'll continue to see that evolve with an increased institutional base as we start production here.
And again, what are you? I'm trying to work out what are you doing to actually drive a bit more liquidity in the stock. I think you're trading 700,000-800,000 today, which is sort of reasonable. But if you want to be on things like GDXJ, what are you doing about that in terms of talking to the market?
Yeah, we've been very active over the last several weeks here to really get the word about how close we are to production and what the real growth aspirations of the company are. In fact, if you look at Tuesday, we traded 7 million shares collectively across all of it. And so we've really seen an increase in liquidity over the last couple of weeks, and I think that will increase as we move again into production with first gold pour targeted for late this year.
Okay, but again, but that talking to who are you talking to? Who's important to you now? Retail becoming less important as you're getting to the point where you're generating cash.
I think all shareholders are important. You need long supportive shareholders to help generate the value for the company, but you also need people who are going to trade the stock as well to generate liquidity. So I wouldn't discount any shareholder. Obviously, we're trying to encourage as many people as possible to recognize the value that we have in the company, the strong re-rate potential as we move into production, and importantly, the growth path that we see in front of us here.
Okay, and with regards to coming back to the assets itself and moving into this kind of phase 2 development, are you saying it's a very similar, consistent ore body, or are you concerned at all technically about your ability to deliver at the same pace?
No, we've been moving at a fairly rapid pace from day one. We've got a very strong understanding of the geology on the ground and effectively unlocked it with what I think is one of the strongest teams on Red Lake in place at PureGold. We've generated new discoveries, as I said, 3 new discoveries over the last couple of years. They're right at surface. We continue to expand them. I don't really see any technical issues. When you look at the project itself, effectively across the 7-kilometer strike length, our mineral resources are effectively estimated with 1.3 million meters of drilling. So I mean, you think about that for a moment. 1.3 million meters. It's an incredible number. I've never seen that in any project I've worked at in my in my history. So that gives you a lot of assurance about the quality of the resource, the quality of reserves. Our average spacing is about 6 to 6.5 meters in our mineral reserves, which means you're never more than about 6 meters away from a drill hole. Again, that gives you a real good degree of confidence on not only the grade but the location of mineralization. So I think that's technically gives us a real leg up from a de-risking standpoint. But all of that drilling sits within the top 1 kilometer. We've got a drill hole down at 2.1 kilometer that shows this deposit persists to depth. And collectively the style of deposit is typically very, very deep rooted. They're volumetrically small, but they pack a huge punch with high grade. And so, our neighbors to the north, they've mined over 20 million ounces. They're down at 2.5 kilometers. We've got a reserve down to 1 kilometer. It's already a 5 million ounce system. And again, we think we're just barely scratching the surface here. I think that this has real potential to grow.
It's interesting. And when you get to the point where you are starting to generate cash, obviously it's not free cash flow, but you're generating cash, you've got options as to what you do with it. You're going to focus on your current assets. Are there any gaps that you think you need to plug in terms of whether it be land packages or similar?
Yeah, we've been quite successful, in terms of consolidating the land position around the key piece of ground that we hold. We've done three deals over the last several years to consolidate it. We're always looking. I mean, in the Red Lake camp, we're always looking at other ground and evaluating opportunities to move forward. Obviously, our first focus here is to execute and build our mine on time, on budget. We have strong growth aspirations organically from within our property package, but clearly we'll continue to look outside as well for opportunities.
Look outside meaning land packages or companies?
Yeah, land packages. In longer term, I'm looking to grow a mining company here. I have no desire to be a single asset company, and we will look for growth opportunities when the right time presents itself. Again, we've got a path in front of us that we need to execute on, but absolutely we'll be looking at other opportunities when we move forward.
So, I mean, last year was quite a strange year for gold, and obviously it kind of finished in a nice spot because the price kept rising, which is great. But the types of signals to the market last year, which would normally have resulted in some kind of value accretion, weren't there. I mean, do you think that has changed now that that gold is over $1,700?
I do think it's changed. I think we were setting up already for a constructive market for gold. As I said, we've got real interest rates are already pushing towards zero in many jurisdictions. Government debt is at near record levels. We've seen central banks buying, so Russia, China, others have been buying gold over the last time to bolster their own currency. Right now, with the ongoing crisis, governments across the world are printing money, and ultimately that's going to diminish the value of that money. And so you can't print gold; you need to mine it. And so I think there's a real strong argument for the value of gold in this market dynamic. So yeah, I think we're moving very constructively with respect to gold. And again, to tie it back to Canada, we've got a government here that is fiscal policies and the bailouts that we're seeing over the last several weeks here are driving the Canadian dollar downward. Combine that with oil prices, I don't see the Canadian dollar really improving very rapidly from here. So I think we've got a double bump here that we're going to be able to take advantage of being so close to production.
Yeah, I think that's true. Obviously, we can't have a conversation like talking about COVID and the impact on the company. Frustrating time for you, given that you were, actually setting a good pace for all of this. You're still looking to the end of this year to pour. We are, yeah. We've obviously it's a situation we've been watching very closely. From early in the year. Mining is an essential service in Ontario, and that covers exploration right through to operations and reclamation. We're working from home where we can. We've got physical distancing policies in place. We're monitoring people on shift change, and thus far we've seen no impacts at site. Relatively fortunate in the Red Lake, Ontario, located in the western half of Ontario, has no COVID cases. There's actually none in all of Northwest Ontario, and hasn't been for some time. And so being in a community as opposed to fly in, fly out, all of our employees live in Red Lake, work in Red Lake. It restricts the movement, if you will. So we're fortunate that it's a relatively straightforward area to build a mine. Okay, what are you excited about? What's going to get you excited about all this? I'm really excited about the opportunities on our project. I'll talk about the 8 zone. The 8 zone is our high grade zone. It runs 20 to 30 grams per ton. It forms part of our mine plan. We have inferred resources in there. Importantly, it's open both up and down plunge. So I'm really excited about getting underground, setting ourselves up from an exploration perspective, and starting to put some drill holes into the 8 zone to expand it. I think the market's going to get really behind us as we start to drill those holes and see some of the truly phenomenal grades that we've seen in work that's been done thus far. When's that coming? So it's interesting because we started our pre-production underground development in December. It's about 5 months ahead of plan. To date, we're achieving around 8 meter advance per day versus a plan of 5 meters. So again, we're about 50 to 60% ahead of plan. And what that does is it de-risks startup. We're going to open up more of the mine. We'll have more mining areas to evaluate,
and we can optimize our mining sequence to bring high grade forward. The other really important characteristic there is we're going to get down there faster. And so when you look at the cash flow, it really peaks out. Pre-tax cash flow at today's metal prices is about $200 million in year 5. That's the 8 zone driving that. And we think we can bring that as much as 2 years forward. So you'll start seeing some drilling in the area here in the next couple of years, and it'll be really exciting.
That's fantastic. Well, look, Darin, nice update. I mean, it's obviously moved on significantly since we last spoke in August, despite the interruptions in the market at the moment. We should stay in touch because it sounds like the end of this year is a very, very big moment for you and your plan. So yeah, pick up the phone, let us know what's going on.
Excellent. Yeah, thank you very much for your time. I appreciate it.